Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I would really appreciate it. So, my favorite thing about Bitcoin did a video about MSTY and his deep dive into trying to understand what it is. And he did ask, hey, does anybody who knows more than cover calls in general and high income ETFs, could you give me some feedback? And I'm not perfect, but I do like covering MSTY and high income ETFs, so maybe I could give some pointers. So I do agree with him that this is a fund that doesn't really have the bad kind of NAV erosion, but it does oscillate. And his main concern was, well, he comes at this from the perspective of a Bitcoin maxi and MSTR maxi, and like it's an interesting play to say, like, I'm going to invest in MSTY so that I can generate income and it protects my investments in Bitcoin and MSTR from me having to sell it down, because if I have enough income from that, then it protects the rest of my portfolio, which has always been my argument. Like, it's a lot of money and it might not be reliable, but it does create a good buffer in your portfolio. One thing, though, is we should probably stop using ChatGPT to ask about number things. It is a language-based model, and it will make things up, and it doesn't tell you where it got its resources from. So any kind of thing that you get from ChatGPT, I would double check and just make sure that your numbers are correct. For example, a part of his video was saying MSTY has a negative NAV, which, depending on when you're doing this analysis, matters, because it was at $17 almost. It was at $18. Like, yeah, that is below $20, but now it's at $21. So at the moment, like, this is Morningstar.com. The NAV, not the total return, but the NAV for the 1 year is at 7.34. And so the category NAV is at 4. So it's not a negative number. And if it's not a negative number, then the NAV can't be that bad. However, we are heading into winter, so I am expecting the MSTY price to go down. But I just wanted to point out that Coney and MSTY are not, their NAVs are not negative at the moment. So it is what it is. But also, if you go to YieldMax, this is also not YieldMax. Okay, so this is MSTY. You can tell, they're very transparent for YieldMax, no matter how much I dislike some aspects of their website. You can download their intraday trades and you can track, are they winning their trades or are they not? And which ones are they winning and are not winning? And if you don't feel like doing that, but you want to know that information, check out Retire on Dividends. He goes through it, especially the estimation videos that he does the weekend before these distributions, because the ones that he follows, he knows, did they win their trades for this time period? And so, also, if you want the tax information, if you want to know about the return of capital, and this is the one part of their website which is actually in alphabetical order, so gotta give them the credit where credit is due. But you can look at, and I don't like the contrast on this, but this is the most recent, and they'll tell you how much of this is return on capital. So that's not looking great. Trying to find, there's so many weekly ETFs. Are these the weekly ETFs? This is Group D. Apple, AI, Amazon, Disney, Mr. Okay. So return of capital is 97.54%. But they've been winning their trades. So it's not the worst thing in the world, this return on capital. It's actually more like an accounting trick. In the cases when you know that they've won their trades and they're returning capital, then it's just more tax efficient to be in MSTY than it is to run your own cover call on strategy. So as long as it's not the cannibalism type of NAV erosion, then it's fine. That's my perspective anyway. He's not wrong about his analysis, where it's like, so for cover call ETFs, they make their income 3 different ways, but mostly it's the synthetic and the cover calls. So in a market downturn, like a sharp one, and the volatility rises, then the fund is able to close the cover call and reopen it at a lower strike price, capture more premiums, which is why when there's a big downturn in like the S&P 500, 2 weeks later, XDTE has a big payout because they were able to get more premiums for that time period. So that's true. Like, the price goes down, the premiums went up, so you actually made money even though the underlying portion of the NAV went down. So you actually did earn that money, even if it is return of capital on the accounting side. And then if it trades sideways, then depending on how aggressive the synthetic is, you could either just break even with the synthetic or win them. And then if it's trading sideways, they should be winning all their cover calls. So you'll at least be winning the weeklies. And if it's a slow, like 7% drop for 6 months, then eventually, hopefully, they'll be more conservative with their underlying, the synthetic. That way, they don't lose as big with the synthetic, and they're still winning their cover calls. And then on the way up, YieldMax actually in their prospectus they're able to do call spreads, but they don't usually actually use call spreads. But they did an amazing job. Honestly, I am impressed. Like, this thing was at $18, and then just a couple of days later, it was at $20, almost $21, like, almost in a single day. Like, this was April 11th, and at the end of April 11th, it was almost at $20. It was good. I'm happy that it does that, and it didn't get capped, at least not as much. But it really comes down to, I believe that MicroStrategy, well, strategy now, that we are on that cycle that will continue to rhyme with past cycles. So we will have a winter. But I do believe that if I keep investing through the winter, that with the halving, there will be a period where there is another bull run and a run up. So I am choosing to invest through the winter and just have faith through this. One reason for this, though, is because I started to invest in July. So I didn't do the bulk of it until August, though. So I'm 88.28% paid off on my return of investment. I'm only 2 1/4 of a distribution to be at 100%. So from my perspective, because I invested a year ago, I don't have that big of a risk going into winter because they've already paid me back my money. And I am using the money I got from here to sell puts on MSTU, and MSTU should have double the implied volatility as MSTR, so I should be able to buy more MSTY and MicroStrategy. And then I've also been doing a little back testing thing here, because a lot of people really are like, just buy MSTR and sell shares when you need it. But if I consistently every month need $3,500, and there's 3 scenarios here. I only take out that $3,500 and then I reinvest everything in MSTY, or I reinvest everything in MSTR, or I split it 50-50 between MSTY and MSTR. So, 6 months into this, if I had invested 50% each, then I would have more principal if I had done 50-50 than if I had done MSTY by itself. And it's not less than MSTR. And if you go this whole way through so far, because of the big run-ups and everything, MSTR is still winning. But if I'm only investing in MSTY, I would have 3,450 shares by now, versus I started with 589 shares, and now I have 374 shares. So I always feel pretty obvious when I say, when you sell something, you don't have that anymore. So there's the sequence of returns risk of now you have less shares, so will it always be better to just have MSTR if you have a regular expense that you're trying to take out? And I mean, it only takes basically up to 7 more months of it just trading completely sideways, and you would have had more money if you had just invested and reinvested in MSTY, because it's additive. So, and the reason that this keeps getting lower, the 50-50, is the amount of shares that you have doesn't keep up with the $3,500, so it does accelerate how many shares you don't have. So that's why that number is so bad here. But I do believe that even though I am doing this experiment and I'm at the point in the experiment where I have almost 100% ROI, that it is important to invest in other things with MSTY, and that way you have a more sustainable and less volatile portfolio. For example, in 4 years, hopefully I'm getting $10,000 a month from the MSTY that I've already invested. At that point, I will be buying SPY leaps because I only need 7 to, at minimum, to sustain my lifestyle. So $10,000 is enough to buy a SPY leaps at the furthest expiration date. You can get them cheaper, and depending on the strike price and when the expiration is. But if I can get myself to the point where I'm getting $10,000 a month from MSTY, and we're in the middle of a bull run, then I can use the whole bull run to buy SPY leaps, and then I don't care after that what MSTY does. I have enough from the SPY to retire. So if MSTY wants to be kind and continue to give me money, then good. I already got my return on investment. I'm already getting my entire initial investment back every single month. What I mean by that is like initial investment with $10,000 in 4 years, you get about $10,000 per month. So the reason for that is because it's been an average of over 100% yield. So we have a lot of little experiments going on. We're very excited about MSTY, but for me, like, I do think that we will be going through a period where it's not the most ideal situation for MSTY, so I wouldn't put $10,000 into MSTY right at this exact moment. But I would sell puts on MSTY, and I would sell puts on MSTU. I am selling puts on MSTU. A lot of puts on MSTU, and eventually I might buy a leaps on MSTR and sell cover calls that way. But I would prefer just to sell a put on MSTR and start a legitimate dividend wheel on that, because you will actually get more money than if you just invest in MSTY. So I like getting the double MSTU premium as I would get from MSTY, and then eventually when I get about $2,000 from my MSTU options, I'll be selling puts on MSTY, and then whatever is left over from that, I'll just invest in MSTY and MSTR. And so I want to build up, my MSTY and my MSTR in my portfolio. So is this a fragile strategy that banks on a lot of things being true at the same time? Sure. But it is also a strategy that is returning over 100% yield, so is forgiven, at least as far as I'm concerned. So I still say that once you have your initial return on investment back, the risk to the strategy becomes much less. And then when it is in the next bull run and you are getting a lot per share that you've bought very cheap because you bought it through the winter, then that's the time to invest it in other things so that you can retire. So that's like my overall long-term strategy. I want it to do well in 4 years, and then I want to not care whether it works beyond that. So if you go to the website that I've been maintaining, or I've made, and you filter on crypto, you can see MSTY, and it does oscillate by a lot because it is crypto. It is Bitcoin. And the reason, as far as I can tell, why MSTY is doing much better than Coinbase is that it is just Bitcoin related, and it actually does stay within its Bollinger Band. Like, there's really not... Tesla has this habit of, like, violent uptrend and then violent downtrend, and just... it doesn't have time to recover because it doesn't trade sideways for long enough. But MSTY and Bitcoin, they tend to trade sideways for a long time, and then there's a sharp spike in either direction. So that's why it's been okay so far. I'm not mad at it trading sideways, and it is what it is. But you can use, if you're in this details page, you can click on the title of it, and it'll take you directly to the MSTY page where you can find all of the information that you need to make your own educated decision on whether this is a strategy and the volatility and the risk profile that fits your portfolio and your investing. And then we have Financial Philharmonics. I created the timely tickers, and it is basically a big alliteration trance. So I like it a lot. And anyways, what are your thoughts on MSTY? What are your strategies on MSTY? And do you think that this is a yield machine, or do you think that it is a trap? And I will talk to you later. Bye.